money market funds have been known to receive deposits or have been in the business of receiving deposits from the public and investing these deposits or these funds deposited with a specific money market funds with different investment vehicles. That is through fixed deposits in banks, through treasury bills, and even commercial papers. Yeah. Now, that is what we have been knowing money markets to offer, and they still offer that to date. Remember, money market funds are regulated by Capital Market Authority, CMA, and unfortunately, they are not covered by KDIC, Kenya Depositors Insurance Corporation. They are not covered by KDIC. Now, commercial banks, on the other hand, have been known to receive deposits from the public, to be in the business of receiving deposits from the public through current accounts, savings accounts, and even through fixed deposits, or what we call certificates of deposits. And they utilize these deposits they have received from the public to lend or to extend credit facilities to the public. They also can or do invest in government securities. Those have been the two different functions of these two financial institutions: money market funds and commercial banks. Money market funds receive deposits from the public and uses these deposits they have received to invest in short-term safe securities or investment vehicles. That is treasury bills, commercial papers, and they even hold some of these funds in fixed deposit accounts in commercial banks. Now, commercial banks, on the other hand, have been known to receive deposits from the public, and their core business has been to lend, to offer credit facilities, which money market funds have not been doing. All right. Now, over and above receiving deposits and lending, commercial banks have also been known to offer forex trade services. Now, that, of course, and other things that banks offer, but there has been a trend. Lately, we are seeing a new trend, a trend where commercial banks are evolving to offer money market facilities or money market products. Remember, a money market product is where you give the fund manager your money, and then they collect these funds from different people, from different investors, put them together and use these funds they have collected from these different investors to invest on your behalf, to invest on my behalf. And at the end of each month, they will credit my account or your account with interest earned. This interest varies month on month. Withholding tax has been applicable on that interest, and you have been enjoying compounding effect. Now, banks, on the other hand, have been receiving deposits from the public and using these deposits largely to extend credit facilities. But we are seeing a new trend where banks are now venturing into money market. Yes, they are still taking money, they are still receiving deposits and still extending the credit facilities, but over and above that, they have now started, commercial banks have now started to receive deposit from the public and use this deposit to invest on behalf of their customers. That is, they are now offering money market products. Some of these banks that we have seen launch these products are banks like ABSA, Equity Bank, Cooperative Bank, NCBA, KCB, and the latest entrant in the market is Stanbic Bank. So this piqued my mind. Why would banks whose core business has been receiving deposits and lending to the public now want to receive deposits and invest on behalf of the public, just like the money market funds have been doing? Now, a few years back, yes, there was money market there were money market funds, but they were not as sold as they are today. If you are on any social media platform, trust you me, a day will not go without you seeing a post or a comment with the word money market fund in it. So money market funds have been popularized. They have been popularized. And remember, these guys, they receive the money, they receive the deposits, and then use these deposits that they have picked from me, that they have picked from you or received from you to invest in banks. So I think the banks are thinking, why would I wait for them, for the MMF to receive funds from the public and then bring for me, now the bank, to lend to the public? Why not just go straight to the public and receive these deposits from our customers, from our customer base, and invest on their behalf? So this video, I would like us to compare a money market fund run by a primarily money market fund and an MMF run by a commercial bank. Will there be any differences in these two umbrellas? Which one would you feel safe going for? An MMF run by a primarily MMF or an MMF run by a bank? From where I'm sitting, I will be more comfortable going for the MMF run by the bank. Do you know why? I'll tell you. Now, money market funds are regulated by the Capital Market Authority, CMA. So the MMFs are regulated by CMA. Banks, on the other hand, are regulated by Central Bank of Kenya, CBK. All right? However, because MMFs are regulated by CMA, for a bank to run an MMF product, they would need to get approval by CMA. So that means that MMFs are regulated by CMA. They have one oversight authority body, which is CMA, and commercial banks, the MMF run by the banks, have CMA as an oversight body. And because it is a commercial bank, certainly they still fall under CBK. So CBK, they have two oversight bodies, Central Bank of Kenya and CMA. CMA is coming in because of the MMF element. Now, over and above that, remember I had told you earlier in my earlier videos that MMFs are not covered by KDIC. MMFs are not covered by KDIC. So the deposits you have in MMF are not protected by KDIC. Should an MMF go under? Let's not talk about that. Now, commercial banks, on the other hand, are protected by KDIC. The deposits you have by commercial banks in a commercial bank is protected by KDIC. What I'm not exactly certain of is if you deposit in the bank as an MMF product, whether that will still be protected by KDIC. But certainly commercial banks are protected by KDIC. Now, another benefit, another reason why I would choose an MMF offered by a bank as opposed to an MMF offered by a primarily MMF company is that banks do publish their books every quarter. They publish their books quarterly. So you have a chance to assess the performance of whichever bank will be running your MMF. Do you have an MMF with any of the commercial banks? Forget about the Etikas, forget about the Lofty, Nwealth, Jubilee, Old Mutual, Faulu. Forget about those other MMFs. I'm asking about MMF run by commercial banks. Stanbic Bank, Cooperative Bank, Equity Bank, ABSA Bank, NCBA, and now Stanbic. What has been your experience like, or why did you choose to specifically go for the MMF run by that bank and not the other MMFs, the other Jubilee, the insurance, most of them are insurance companies, the insurance MMFs, the CIC, Jubilee, Old Mutual, Lofty, and so on. I'm curious to know. Please press the subscribe button. Give me a like if you liked the video. If you did not like the video, give me a like still, but let me know in the comment section why you didn't like the video. See you on the next video.